Good afternoon, ladies and gentlemen, distinguished Prime Minister, dear guests. It is my great pleasure to welcome you once again to our next session of TATRA Summit, and it is my privilege to welcome the Prime Minister of the Slovak Republic, Robert Fico, who is with us and who will address the TATRA Summit on the growth agenda. As you know, we have put the growth in the forefront of this year's TATRA Summit, and there are at least two reasons for that. The first one is that we have managed to overcome the euro crisis, and I dare say that the worst is behind us. Nevertheless, during the crisis and the crisis operation, we kept saying that to save euro is not the end. It is just the major precondition for overall economic recovery. And the second point, if you look at the recent economic forecast that the European Commission has published this week, I think, there are still figures that speak for themselves and say that we do have a problem with economic recovery. So this is the main reason why growth agenda is the main topic of today's TATRA Summit. Now, of course, growth is a very complex economic and political and social category, and if you speak with the countries who received assistance during the euro crisis and they had to stabilize their financial sectors, you get very much different perspective than you have when you speak with the countries which have consolidated their budgets and which have fiscal space to support growth within their national economies. But you have the third picture if you speak with the countries for which structural funds represent the main source of public investment. And certainly the picture is not complete when we speak about growth, because, as I said, this is a very complex category. In fact, you cannot decouple it from a very broad political environment in Europe, because it is very much, at the end of the day, linked with the question whether people trust European Union and the institutions from which they rightly expect that they help generate growth. So I think, ladies and gentlemen, all these are those elements which were important for us to decide to talk about growth. And I agree that economy, which is in forefront of our consideration, is not everything. But there is nothing without economy, and we have to respect that. We have with us Prime Minister of the Slovak Republic. He, in Brussels and in Slovakia, very often speaks about the need to generate growth. Yes, there are expectations from European Union that it helps Slovakia and other member states to pool all capacities to help our economies, and that's the best reason for us to listen to you, Prime Minister, and share with us your views about how Slovakia views the growth strategy, but maybe also to speak from a broader perspective of Central Europe. May I now, Prime Minister, ask you and address our guests here. Thank you.
Good afternoon. Ladies and gentlemen, it is a great pleasure to welcome you here in Bratislava. TATRA Summit, already a traditional venue for European debates, could hardly come in a more convenient time. Just a few days ago, the new European Commission, headed by Jean-Claude Juncker, has taken office. In its president's words, the Commission will, I quote, put policies that create growth and jobs at the center of the policy agenda. The new European Parliament, European Commission, and the President of the European Council should bring this aim to the very center of their activities. After 2004, when several Central European countries joined the European Union, the region has quickly become one of its most dynamic parts. This has made its voice more and more relevant in any debate on the future of the European Union. Today, Slovakia belongs to the very core of the European integration. We have Euro, we are in the Schengen era. What makes it a perfect place to discuss current challenges we face in Europe. Without doubt, Central Europe has been a success story of European integration and EU enlargement. Recent 10 years have been the best in Slovakia's history, and I think this applies to the whole region. However, this does not mean that the decade would have been a bed of roses. Fact is that the Eurozone crisis has hit the region probably in the worst time. It came right at the moment when we started to increasingly benefit from our EU membership. Economic growth was at record heights. Slovak GDP grows more than 10% in 2007, and we were rapidly catching up with the top advanced member states. Other Central European countries were in a similar situation as well, but at the end of the day, we could not succeed in keeping the positive momentum of that period. In fact, only Poland did not face a decrease in its GDP during the crisis, thanks to its bigger domestic market and relatively less open economy. Beginning of the crisis and following years have been marked by decrease and stagnation of spendings in our traditional markets. In Slovakia, this reflected in lacking intensive demand and limited growth of production. Still, within the European Union, we are doing well, and Central Europe belongs to its fastest growing parts. Some regions even belong to the richest ones. Who would expect, ladies and gentlemen, in the 90s, that Bratislava region would be number 5 in the whole European Union if we take GDP per capita? On the other hand, we need to do much more to eliminate the gap between the more and less successful ones, since regional differences also in Slovakia are still enormous. Truth is that we have not yet recovered from the financial debt crisis, and Europe already faces another economic slowdown. The European Commission's autumn forecast, published on November 4th, 2014, projects weak economic growth for the rest of this year in both the European Union and the Euro area. Despite favorable financial conditions, the economic recovery in 2015 will be very slow. Growth is expected to rise with 1.5% and 1.1% for the European Union and the Eurozone, respectively, on the back of improving foreign and domestic demand. After a slowdown in 2013 due to stagnating domestic demand and a deceleration of exports, Slovakia's economy picked up in the first half of 2014 on the back of rising consumption and investment. Growth is projected to continue at a similar pace for the rest of the year, with the real GDP expanding by 2.4% in 2014 as a whole. Our Visegrad partners are also experiencing economic expansion. This is definitely a positive news. Nevertheless, we cannot be too comfortable and assume that everything will be fine in the future. With 85% of our exports flowing into other EU member states, the success of the Slovak economy is dependent on the health and stability of the economies across the European Union, and in particular, that of the Central European region. Anemic growth and lack of confidence in the European Union and the Eurozone are further present in our daily reality. Obstacles to grow include insufficient financing of the economy in the private sector and an unsatisfactory level of public investment. Commercial banks are still hesitating to bring money to the real economy. They park it to the safe port of ECB on a minimum rate. This belongs to be changed. Lack of economic growth has also direct social impacts, with the unemployment being the biggest challenge in Slovakia. Despite too complicated economic surroundings, undertaken measures seem to be bringing results. In Slovakia, the unemployment rate has been descending recently. Global economic slowdown and its effect on world trade is also one of the causes of the Eurozone's loss of momentum. Geopolitical tensions, in particular, as a result of the conflicts in Ukraine and the Middle East, have negative influence on growth. Geopolitical risks are, of course, a topic that would deserve a summit of its own, so I will leave that aside for today. Suffice it to say that meeting major geopolitical challenges will require both sustained effort and creative thinking. With sanctions in any direction, we will not manage. In our response to economic crisis, we have agreed on crucial measures and laid down important rules. Unfortunately, sometimes it seems that not all of the European member states have learned the lessons, since some of the countries are unwilling to respect them. Let me remind you that one of the most evident moments of the crisis was the need to respect the rules we agreed on. We should not make the same mistakes again. Immediately after the figures start to look a bit more optimistic. In particular, it is crucial to preserve the credibility of fiscal consolidation. Changes to the stability and growth, therefore, need to be avoided. Debate on whether to continue in fiscal consolidation and cautious spending, or on the contrary, cut it loose after years of crisis, has been ongoing. Discrepancy still exists between the fiscal consolidation efforts and economic recovery measures, fostering investments and economic growth. In my eyes, the decisive but also the most difficult task is to find the right moment to tune the economic policy rightly. One can't massively invest with a debt of 100% GDP or more, because you risk to lose the confidence of markets. On the other hand, fiscal consolidation cannot be done for its own sake. Time should come to invest heavily in the economy again. But let me emphasize one crucial difference in spending money. Investing does not equal wasting money. We should introduce a differentiation to productive investments and consumption investments. First is bringing the financial means back after a while. Second is growing my debts. More to the point of today's topic, efforts are in full swing to support private investment so as to boost growth and combat unemployment. The banking union is in the process of implementation, which should lead to higher confidence and thus more lending both to and by the banks in the Eurozone. On the measures taken by my government, you can see that I am no fiscal gambler. Public debt of Slovakia at 55% GDP and budget deficit under 3% shows that we treat the fiscal policy responsibly. However, time has come, and this is the momentum I spoke earlier, to consider responsible rise of governmental spending in frame of condition of growth and stability pact in order to support growth after years of fasting. We are well aware of that responsible fiscal policy is one of the most important comparative advantages of Slovakia. We have no intention to lose it. As said, much remains to be done, but we should not overlook the important steps that have recently been taken. Already, the stress tests conducted by the European Central Bank have brought new levels of transparency to the financial sector, and we should see soon further positive effects of a confidence boost, given that as from the November 4th, 2014, the ECB has taken over the role of the regulator of the largest Eurozone banks. Regarding steps being undertaken right now, the Slovak Republic welcomes the Commission plan for the 300 billion euro investment package, though more information on the funding is needed. The special task force created to identify projects will play a crucial role in helping the European Commission shape the investment package. It is important to ensure that all member states benefit from the proposed investment boost. Slovakia has set up a national task force to facilitate this by identifying projects at the national level. Possible solutions, though, could entail the use of existing flexibility in the Stability and Growth Pact to support structural reforms and investment with the European structural and investment funds. Let me draw your attention also to the fight against tax fraud and tax evasion. If we truly want to succeed, it must be an issue of the whole European Union. Tax havens cannot be found even within the Union, what means a real challenge if the EU intends to take coordinated and effective approach. Recent news about billions of dollars saved by large companies on taxes in EU member states cast a doubt on the credibility of these efforts. Concerning the convergence of growth in Central Europe with the EU average, we believe a combination of factors is at play. First of all, we should put things in perspective. Central Europe is still growing faster than the Eurozone and the European Union. Furthermore, the economic crisis has dragged everybody down, but as export-driven economies, it kept our level of growth due to low demand elsewhere. Having said that, the issue cannot be dismissed. The growth differential is smaller than it used to be. The solution will require us to concentrate on economic activities with a higher value added. We consider investments into innovations, startups, and high-tech technologies to be crucial in our effort not only to be competitive today, but also in 10 or 15 years. In order to do so, we must look at our education system so that it meets the needs of the economy and initiate structural reforms. Even here, though, the role of investment, public and private, must not be overlooked. The two are, in fact, connected. Our public infrastructure, especially motorways, must extend to all regions of Slovakia if we are to attract investors to those regions, which will then increase their contribution to our growth. Ladies and gentlemen, despite the title of this panel, there is no simple recipe for growth or success, not even in Central Europe. Our region has been doing relatively good even during the hardest time of the crisis, but this does not give us the right to get complacent. On the contrary, it is a commitment to keep our economies in a good shape and to work on them further. And I hope we will accomplish this task. Thank you very much for your attention.
Thank you very much, Prime Minister, for your views. We have now, because of tight schedule, Prime Minister, opportunity for one or two questions. So I would like to extend this opportunity to the audience immediately. So please raise your hands and use the opportunity and ask questions.
No questions.
There is please.
Good afternoon, sir. Thatcher Shah from the American Embassy. I was wondering if you could share your views on the balance between decarbonization of the economy and maintaining European industrial competitiveness.
We have, that was envisaged to entertain you. I can have two then.
Dámy a páni, ja považujem za čudné, že na Slovensku nehovoríme po slovensky. Prepáčte, budem na otázky odpovedať po slovensky. Predovšetkým názor vlády Slovenskej republiky, pokiaľ ide o ciele pri ochrane klímy, bol veľmi jasne definovaný na zasadnutí Európskej rady. My veríme, že je to správny krok sprísňovať ciele, ale na druhej strane máme veľké obavy, či tieto ciele nemôžu brzdiť európsku ekonomiku a zvýhodňovať iné regióny sveta. Veľmi sa tešíme na summit, ktorý bude v Paríži na konci roku 2015, ktorý by mal priniesť rozhodujúcu dohodu medzi Európskou úniou a ďalšími regiónmi sveta. A súhlasím aj s tým, že Európska únia chcela byť akýmsi lídrom v tejto problematike. Ak môžeme zhodnotiť závery Európskej rady, sedí tu aj pán veľvyslanec, myslím si, že sme našli rozumný kompromis medzi ambicióznymi cieľmi byť lídrom v tejto oblasti na jednej strane a na druhej strane záujmami podnikateľského sektoru a najmä tých sektorov, na ktorých vznikla Európska únia ako taká. Preto s výsledkami summitu v oblasti ochrany klímy je vláda Slovenskej republiky relatívne spokojná, pretože boli dosiahnuté významné kompromisy.
Ďakujem. Druhá otázka z pléna.
Ivan Bajer, Slovenská spoločnosť futurológie. Pán premiér, voda je, na čom sa aj vláda zhodla, najväčšie strategické bohatstvo Slovenska. Odrazí sa to nejakým spôsobom v stratégii na budúce 20 ročia?
Voda.
Aby som bol úplne konkrétny, na Slovensku sme nemali donedávna žiadnu právnu úpravu, ktorá by regulovala vývoz vody, hovorím teraz o pitnej vode a minerálnej vode, hovorím o vývoze cez potrubia a cisterny. Nehovorím o vývoze vody cez balené nejaké tovary, fľaše a podobne. A zistili sme v dvoch prípadoch. V jednom prípade išlo o hranice medzi Poľskom a Slovenskom a v druhom prípade išlo o hranice medzi Slovenskom a Maďarskom, že malo dôjsť k nekontrolovanému odvádzaniu pitnej a minerálnej vody z územia Slovenskej republiky. Preto sme pripravili návrh zákona, ktorý túto úlohu dal vláde Slovenskej republiky, ale keďže vzniklo okolo toho veľa polemiky, vznikla široká dohoda politická a my sme zagarantovali cez Ústavu Slovenskej republiky, že s výnimkou humanitárnych situácií, kedy o tom bude rozhodovať vláda, sa ani pitná, ani minerálna voda nemôže, pokiaľ sa bavíme o potrubiach a cisternách, vyvážať z územia Slovenskej republiky. Toto bola odpoveď na diskusiu, ale veľmi skrátkovito môžem povedať, Slovensko má v podstate dve významné strategické suroviny a to je drevo a pitná voda a bude veľmi záležať od ďalších vládnych garnitúr, ako sa k týmto dvom strategickým surovinám postavia. Ďakujem.
Ďakujem. Máme ďalšie otázky z pléna? Nech sa páči. V prvej rade, to už je to tretia otázka, pán premiér.
Sirotka, Slovenská asociácia malých podnikov. Pán premiér, Slovensko nie je samozrejme len veľké podniky, až 98% tohoto podnikateľského prostredia tvoria malé a stredné. Ako by ste definovali, alebo ako vidíte úlohu tých našich malých stredných podnikov v tom procese, ktorý ste tak jasne definovali pred chvíľkou?
Ďakujem za otázku. Dobre viete, že je pomerne rozdielny názor na úlohu veľkých firiem a malých a stredných podnikov na Slovensku. Kým niektorí hovoria, že našou povinnosťou je predovšetkým vytvárať podmienky pre malý a stredný sektor, tak veľkí zamestnávateľia hovoria, že malý a stredný sektor sa bude rozvíjať len vtedy, ak tu budú veľké spoločnosti typu, ja si teraz naozaj nechcem vymýšľať, ale hovorím o veľkých automobilkách, hovoríme o ďalších a ďalších veľkých firmách typu US Steel a podobne, na ktoré sú naviazané aktivity malých a stredných podnikateľov. Čiže ja by som nefavorizoval ani jednu, ani druhú stranu, skôr by som hľadal rovnováhu medzi záujmami malého stredného biznisu a veľkého biznisu. Len v zhode, len v rovnováhe sme schopní zabezpečiť, že budeme lepšie fungovať. Ja vám dám jeden dobrý príklad, ktorý považujem za veľmi správny. Máme napríklad významného zamestnávateľa v Ružomberku, Mondi SCP, ktorý zamestnáva niekoľko tisíc ľudí a urobili a teraz odovzdali do prevádzky nový kotol na spaľovanie tých častí dreva, ktoré sa nedajú použiť na výrobu celulózy alebo papiera. Je to moderná technológia, ktorá výrazne pomôže. A bola to jedna z najväčších investícií v tomto regióne. Objem investície bol 128 miliónov eur a k tomu ešte bola druhá investícia 15 miliónov eur na tzv. Vápennú pec. A teraz prichádza ten basic question, základná otázka. Dobre, to je fajn. Sú tu nejaké veľké firmy, ktoré robia veľké investície. Profitujú na tom malé a stredné slovenské firmy? Toto je príklad, kde chcem mimoriadne oceniť. 70% zamestnancov, ako aj firiem, ktoré sa zúčastňovali na dodávkach, boli firmy zo Slovenska. Veľmi bude dôležité pracovať s veľkými spoločnosťami, aby pri podobných veľkých investíciách dávali priestor predovšetkým malému a strednému sektoru, a to je aj otázka našich častých stretnutí s predstaviteľmi automobilového priemyslu. Ja napríklad veľmi vítam aj to, čo sa dnes deje v niektorých sektoroch automobilového priemyslu, ako je napríklad výroba pneumatík Continental Matador. Nedávno som navštívil nové R&D centrum, kde bude pracovať stovky pracovníkov v krátkom čase. Tlačíme na automobilky, ako je Volkswagen, Peugeot, Citroën alebo Kia, Hyundai, aby väčší podiel dodávok prichádzalo zo Slovenska, lebo niekedy vidíme, že sa dovážajú na Slovensko aj produkty pre automobilový priemysel, ktorí by vedeli dodávať menšie firmy. Čiže vidím akúsi rovnováhu, synergiu. Nechcem uprednostňovať a hovoriť, že len malé a stredné, alebo len tie veľké.
Ďakujem pekne, pán premiér. Čas asi uplynul. Alebo ak je ešte ďalšia otázka z publika, keď nemôžem sa pokúsiť. Ale tak to už nie, prosím. Aby sme, je tu veľa ľudí, aby sme nemali jedného. Ak nie, pán premiér, ďakujem veľmi pekne, že ste si našli čas v tomto období pre TATRA Summit a budeme sa tešiť aj na budúce na takéto stretnutie.
Ďakujem, všetko dobré.
Je tu profesor Čerhojgen, by vám ruky podal sebi v prvé rade. Kým odíde pán premiér, poprosím Martina Šantu, aby si zorganizoval panelistov a pozval ich na pódium.
So. To pohoda. I just hope someone will stay. I just hope someone will stay. Not everybody will stay. Shall we start? Can I ask you, please, whoever wants to stay, who doesn't want to stay, to go? Thanks. Thanks to the Prime Minister and Ambassador Korczak for introducing the panel, which is called Eurozone Recovery or European Recovery Unfinished Business. I respectfully disagree with the question mark. It has nothing to do there. And I'm sorry to disappoint the Prime Minister, but the ECB today just cut the outlook for the growth and inflation once again, so recovery is being delayed even more. So we try not to be boring. I start with introducing our distinguished panelists. To my left is GUNTRAM Wolfram from Bruegel. He's the head of Bruegel, which is the think tank based in Brussels, and the spot Brussels connoisseurs go to seek wisdom, usually. Then it's Ivan LESAY, who is the economic advisor to Slovakia's finance minister Peter Kažimír. It's Mr. SÍKELA, who is the head of Slovenská sporiteľna, Slovak unit of Austrian bank Erste. And last but not least, it's Mr. I'm sorry, Mr. STRAUCH from European Financial Stability Facility. In Slovak, it's Euroval 1. In some countries like Greece, a hated agency just recently. and he is here to share his wisdom in what they gather in the course of crisis. So I'm not going to talk too much. We know that there is anemic growth, vanishing inflation, unemployment is close to record highs, and there is no silver bullet we can use to kiss all the problems goodbye. So I'd like to start with you, if you allow me, and ask you what's your reading, why the current economic recovery is so weak, so anemic, so fragile on both sides, supply and demand side, and just maybe try to walk us through.
Okay, so thank you very much. Let me start by saying that I think the current situation is actually quite dangerous. I mean, we have a situation in which the lost decade that we claimed we would avoid almost becomes a certainty, because we are now in year seven of basically crisis with GDP at best flat, unemployment very high, as you rightly say. And let me say it's dangerous for the EU compared to countries like Japan, because the EU is not one country. The EU is a fragile union based on, of course, we have Jean-Claude Pierre, based on law, based on treaties, but it's not one country. Japan is a country, and no matter how the economy is going, it will stay a country, and that is not the case for the EU. And so I'm quite worried that we have a very, very weak economic outlook, a very weak situation in terms of deflation, inflation. Inflation is very low. We all know that low inflation makes adjustment much more complicated. We know that low inflation makes the issue of debt sustainability much more illusionary, much more difficult to sustain. And all of these things together mean that we are in still for a pretty rough time. So I think what we really need is we need much bolder policies than what we are currently implementing. We've heard yesterday already quite a bit about the European investment plan, which I understand is being supported by the German government. But of course, what is not said is how it is exactly supported. So I do think we need to have a serious investment plan which puts up really new resources. And there was the question, how do we spend these new resources? I think Mr. Verheugen raised that question. I think it's clear that next year we can't spend it on European projects. I mean, there are no European projects. I mean, suppose we really get 300 billion in addition, there are no European projects at the moment on which we can spend money next year. However, there are lots of national projects that have been shelved in the last couple of years. We know that public investment, especially in the periphery countries, but even in France, also in Italy, even in Germany, has been extremely weak and has been going down. And so there are projects that have already been passing all the permission process, regulation process, and so on, and that have been postponed. And so I think one avenue that I would take, certainly for next year, is use common fiscal resources, at least in the next year, to fund some national investment projects, and then start building European investment projects that really deserve to be funded. So we want to avoid certainly useless projects kicking in for 2016 or later. Now let me make one more point, which I think is something that worries me really quite a lot in the current situation. It's the very substantial divergence that we are seeing between France and Germany. Let me say also, of course, between Italy and Germany, but I think the divergence between France and Germany is even more worrying, because in a sense those two countries have traditionally always been the motor of European integration. And at the moment what we are seeing is economically a very clear divergence. I mean, unit labor costs have diverged by 20%, and we don't really see that gap closing. We see economic performance very much diverging. But more fundamentally, of course, we see the politics diverging between the two countries. And that is really a very, very worrying development, because we need those two countries to agree on with each other on a certain number of reforms, be it more demand measures in Germany, be it more supply measures in France. But we need those countries to agree. And if they don't get their act together, it's going to be very difficult for the EU to really stay and become a vibrant EU again. And perhaps I stop here.
Yeah, just two quick follow-up questions. You mentioned Japan. So my question will be, what are the odds that we see a Japan-style recession with maybe low inflation or even deflation in the Eurozone, as you just mentioned? And also you said that France is diverging when compared to Germany, but Germany is not reforming as well at the moment. They are now still railing on reforms introduced by the previous government of Schröder. What is your perspective when it comes to Germany? How long can Germany go without any significant reforms any longer?
Well, look, on the first question, it's difficult to say, but certainly the IMF currently estimates the probability of deflation in the Eurozone at 30%. Now, nobody really knows whether it will happen or not, but certainly even a low inflation scenario is very dangerous. If you look at other indicators like bank resolution, like a monetary policy, like fiscal policy, you see that we are quite closely following in many dimensions the Japanese development after 1990. And we are very different to what the United States did. Early, rapid bank resolution, bank restructuring, early massive fiscal stimulus that then was quickly withdrawn, massive aggressive monetary policy early on that is now starting to be withdrawn.
Okay.
So in terms of the combination of policies, we've been doing all these things, but we've been doing them much more delayed, and I think that's one of the big reasons why our performance is so much worse than the United States at the moment, and certainly I think the Japanese scenario is certainly quite a possibility. Now, in terms of the divergence, France-Germany, I think at the end of the day, if you think about a unit labor cost gap of 20%, I mean, if France wants to have strong industry again, it needs to find good ways of addressing this. And I think their part of the story is working on unit labor costs in terms of working hours, in terms of the annualization of the work contracts. I mean, there's these kind of measures. There's the education system in France that on which you can work and so on. But then the counterpart is, of course, Germany needs to move, and we need also in Germany more dynamic domestic demand, and that has to come, at the end of the day, it has to come from corporate investment, it has to come from more wage developments, better wage developments, and so on.
Is France the new sick kid of Europe?
The sick kid of Europe? Well, I don't know. I mean, certainly I think France is much stronger than many other countries, including Italy. So I personally believe France can turn around, but we shouldn't think that France on its own can do it all. I mean,
you've touched that actually you will prefer to see national investments than growing into the European level. This is something I could like to ask Ivan. While we talk structural reforms and investments, is now sexy and fancy, but it takes time for structural reforms to kick in, like let's say 5-10 years. But what can really be done? But no sugarcoating. In the coming 1, maybe 2 years, what makes the difference? Because if you don't deliver now, then you can forget about any strong recovery. So what can be done in a short run, but in fact in real?
Yeah, thank you for the question. Maybe the answer was already in the question, so I may just reiterate what you suggested. First thing is that the structural reforms are often identified as something that is necessary for growth, which I think nobody wants to question. But the thing is that the structural reforms, the first thing about structural reforms is that you can package basically anything under that, even extremely conservative economic ideas can get packaged in the structural reforms. The second operational problem of structural reforms is that various actors and various member states define it in the way that is, let's say, suitable for them, and even the most fervent supporters of structural reforms often do not reform in their country. So it's a very tricky question, but even if we suggest and if we accept that structural reforms are the way to go, and GUNTRAM mentioned the unit labor cost and some labor market policies, even if this is going to happen, it will take years. It's a long-term project basically. So we cannot expect really like quick win very soon from structural reform. And what is more, it's not like we cannot expect much, but from the short-term perspective, structural reforms often can be even contractionary. They can they can basically go against growth, which is not a radical idea. It has been supported by rigorous empirical economic research. You certainly know names like Danny Roderick or Gauti Egerton, who are embedded in the neoclassical framework and who say basically that even if you manage to push through the structural reforms, their short-term effect is basically disinflation risks, and then especially in the crisis and with when nominal interest rates go down to zero lower bound, so you get basically high real interest rate and then also depressed aggregate demand. So this is certainly not the best way to support growth in the short term, if we're talking about the short term. The second thing I would like to, structural reforms cannot help us. Then the thing that could help us but will not help us is the national fiscal stimulus. It is often in the media, especially in the Anglo-Saxon media, but it has been so much political capital has been invested at the European level in, let's say, austerity policies or fiscal consolidation policies that it is not going to happen very soon. The maximum that one can get is some flexibility that can be reasonable within the rules that are there, but this is not going to happen. So something that can be done very short term, and something that already I would say we have been promoting is the use of the limited public resources. In the case of Slovakia, it's mainly coming from the European structural and investment funds, and trying to engage them in mobilizing private capital. So when GUNTRAM was referring to the European level plan and that it's not enough projects there and we should start with the national projects, this is something that we are trying to do. And for those of you who haven't been here for the first days of the conference, especially at the TATRA Summit Investment Forum, we are launching the initiative of the Slovak Investment Holding, where this money is going to be used in an umbrella fund of funds structure, and the aim is really to leverage private capital and to co-invest in strategic sectors of the economy. And this is actually not something that would be so revolutionary. The investors such as the KfW or EBRD or EIB has been engaged in this kind of business already for some time, and even the European Commission is very supportive of this approach in the new programming period. So I think this is the way to go, in short.
And if you imagine a situation, imaginary one, you have a switch, there is no commission or friendly commission, there is no growth and stability pact. So if you have to pick 3 instruments, you can kickstart growth, what will it be?
I think you can ask this question to other panelists. I don't know to what extent I can be honest here. I'm representative of the Ministry of Finance, so just to imagine that the Commission is not there is not really the most appropriate way to think aloud, if you may. But just to repeat what I've said, I think that even with the Commission being there and support some innovative financial engineering, I think this is the way to go. And then maybe in the course of the discussion, I think I can mention something like a plan or a European fund that could borrow and invest on the European level, and this would be the way to go, even with the Commission there. So, okay.
So now with Mr. SÍKELA, we can go to evil banks. The question will be, why are you not helping the recovery, not lending out? And some people argue that even after the exercise by the ECB and EBA on the stress tests and balance sheets, and the outcome of 25 banks with 25 billion euros shortfall, it's a joke in the end. So what's your opinion about the result, and why are you not helping the recovery?
Well, let's start with the idea that the problem we have is that we in Europe pretend we live in the world where risk can be avoided, and in the world where the things can stay as they are and we can remain rich without changing too much. And I think the banking industry is a pretty good example that the current model of economy means the government regulated, supported and protected this business, fueling the welfare state, is not always helping, to grow the economy. And let's take the banks as the example. Yeah? we made the entry to the banking industry so uneasy that we effectively protected the newcomers to start business there. And then following, you know, the banks grew to too big to fail, were not able or too lazy to evaluate the risk properly. And finally, we have two big banks with too much risk on the books, you know, sometimes also not accounted properly for, with the tendency not to lend anymore because this is too dangerous. And, you know, heavily contributing to the outbreak, or even worse, to the death of the recent financial crisis. So, of course, the direction was obvious. We want to regulate the banks more in order to make them less risky. But there is a one problem that in lending you cannot avoid the risk. Yeah? There is always a certain part of unknown unknowns. It means that you always have a certain part of risk in the lending which cannot be thought, evaluated, and measured in advance. So if somebody believes that there is a risk-free lending or lending with a low risk, it effectively means there is no lending at all. And if there is no lending at all, if nobody is ready to take the risk, there are only two ways. Yeah? Either, you know, there will be somebody who will be ready to bear the risk, I don't know who, some governmental agencies, or the stagnation of the lending will continue. So the first thing is that I understand, you know, the regulations. I understand that, you know, we ask the banks to have more capital buffers, you know, and to be more prudent, you know, concerning the evaluation of the collateral, and this is making the banks more safer, but this is not extremely conducting the lending, because the fact and the outcome is that in this world where, you know, the banks are asked to take less risk, the number of the debtors which will be eligible to get a loan will reduce.
But okay, but this still doesn't answer my question in real, because you have plenty of liquidity. Okay, maybe you can complain and you will complain about the regulation, fair enough. Is the problem of demand, or it's the problem of supply? Because you, for example, from LTROs you took a lot of money, then you parked it at the ECB, make it a lot of money again, and still so there is no problem with liquidity.
It has both parts. Yeah, this is always the question of supply and demand. You know, as it is always in the economy. Yeah? The first thing, of course, and you know, I am also speaking for us because, you know, having, you know, the loan to deposit ratio below 80, I would be rather pleased, you know, to place it with interesting projects, you know, for a nice margin, you know, than, you know, to park it, you know, in the Slovak National Bank, you know, for treasury bills for 0 or even, you know, with a negative charge. But as I said, you know, it has two components. The first one is that, of course, you know, the companies are more afraid about the future, and of course, you know, the return of investments went down, and you know, there is a certain concern, and the readiness of the companies to invest and to take a risk of the future is lower. Means, you know, there is also basically a shrinking demand for the lending, especially concerning like long-term investment projects. Yeah? Partially it is subsidized that they try to go a short-term and, you know, to finance their mid-term investment needs through a short-term loans. And on the other side, these are these regulations which are asking the banks to be more prudent in the evaluation of these projects. Yeah? To ask for more equity, to ask for more collateral, which is basically not available. And in the same time, if you have a certain problem, you know, like a seasonality with the company, and you want to help them with a restructuring of the loan, you have to you have to show it as a form-born, means you have to classify it and you have to create provisions, which automatically means, that the banks aim to be the more conservative as they were, in the past. Of course, we have, now the AQR and the stress testing behind us. We have now more clarity what is the shape of the industry, who is in a good shape, who is in the excellent shape, which might help, to recreate the confidence in the industry and, the confidence, among the market players. However, it is not solving the issue that we cannot have risk-free lending, and if somebody is asking us to take less risk and to lend more, it will not work.
And after the conclusion of the AQRs, do you believe that actually the system is already healthy, or how much healthier it is compared to before the testing?
Look, we know the outcome, of the 130 banks. We know, who have to do their homeworks and who is basically in the shape that there are no homeworks needed. I think the great message for Slovakia is that the Slovak bank seems to be in excellent shape and are ranked in extremely high part of the evaluation, and that purely for Slovakia there is no issue. There is enough liquidity and enough equity in the bank industry available for lending the real economy, and this is now just a matter of competition and of selection of the proper projects which can be financed. This is not the issue of all other countries, because if we look on the development of the lending, of the level of lending across the Europe, is still going down.
This brings me to another question. Many people argue or say that this is a continuation of the financial crisis. So what is the EFSF's view on this one? You've been there from the very beginning. You've seen the crisis coming, the financial one, the economic one. So what's your take on this one?
Yes, thank you very much indeed. We have been there from the beginning. Even though when we started off, I remember with a few people in Luxembourg at the EFSF, during the first weeks there was this idea of first month that EFSF would never become active, right? So you build a firewall, and then, but because you have it, you will never use it. So that has not turned out to be true. But a couple of other things have turned out to be true, I think. And it's actually good that you asked that question, because before we ask what's next, it's good to take stock also where we are. And I think there is an important point to make here. If we think about the crisis and the causes of the crisis and where we are now. If you think about the causes of the crisis, in my view, there are kind of three factors, which is, A, we had, due to the introduction of the euro, something like, if you wish, classical balance of payment crisis. So some national policies were not aligned with the reality of monetary union. You got relatively cheap finance that led to huge imbalances in some economies. Second point was a banking crisis that was, if you wish, convoluted with the international factor, but also domestically driven by the fact, as you were saying, that there was no proper risk pricing, in the banks, and the banks were too weak for the risk that they took up. Third point was evidently also a debt crisis, and which was linked to institutional weakness. Now, I think we have come a long way in addressing those causes of the crisis for different reasons, for the initiatives taken at the national and at the European level, and of that only EFSF, ESM is part of the picture. So if we go one by one, on the balance of payment crisis, what has been done effectively are various steps. The European governance system has been strengthened very much. It has been broadened very much, not only to look at fiscal, but also to look at other areas of macro imbalances. And I think here comes an important factor then with the EFSF, ESM. We have built crisis resolution mechanisms that do essentially operate, if you wish, along the IMF classical model. You provide support in exchange or while countries are doing structural reforms and addressing those underlying structural imbalances. So And that has effectively happened. It has happened in all the program countries that have been with us, and as a consequence of this, the countries are not only marked by the OECD as kind of leaders in reforms among the OECD countries, but they also actively have very much addressed the current account imbalances that they had. They have been very strong in redressing the fiscal deficits that they had. So a lot has been done in that area. The second question is then in banking, and here's all the development of banking union. You are saying it's also making our business now more difficult. Maybe that's true. At the same time, the key point about banking union is undoing this vicious circle between the government and the banks, and the linking the two balance sheets. And the way of doing it is through the bail-in mechanism. So by starting to go along that line, you do take off risk, tail risk from the sovereigns, and therefore also make the system more robust. And then the third point on the weaknesses, institutional weaknesses, I said, I mean, there has a lot been done that has been worked on in order to also increase policy coordination. We will now see how it goes forward looking, but I think overall it's at least worth kind of pausing, if you wish, and say, like, look, I mean, yes, there were causes of the crisis, a lot has been done to address it, and where we are now, we are at least more robust with a view to, if you wish, the tail risks or the risks that were associated and that effectively drove the crisis at the start. That doesn't mean that we are all out of the woods. And the benefit of being the last one in the row is I can immediately react to what was said before, which I'm happy to do in two respects, forward-looking. The first point, in a way also by trying to draw lessons from the crisis. The first point that was what GUNTRAM was saying is that for the euro area, for Europe, anemic growth in a lost decade, and I agree that is what the numbers say, is more risky than, say, for Japan, because Japan is one country. We are kind of a loose combination, more or less loose combination of sovereign states. Maybe right, but at the same time, I think one has to also, in that respect, take the crisis experience serious, and even though we did not jump in the crisis as much or go as far as, for example, Mr. Verheugen would have liked, and as many people would have liked, we made significant progress. If you look at what many countries did, and I think one must acknowledge that the Greek people went, if you wish, through hell. I mean, they did really a lot. And the driving factor for them to be able to do it was actually European integration, or if you wish, the threat of not being part of Europe, which the costs of that are very high. So I don't think that if we were to go through another phase of weak growth, that would immediately threaten, so to speak, monetary union altogether. If we come to the point that decisions need to be taken, I think that there's still a fair chance that we then do the necessary steps. Second point, as regards structural reforms. Again, yeah, the usual claim is, and many people have quoted the OECD, a structural reform takes 5 years to show the effects. Again, in the program countries, we see that the effect has kicked in for some structural reforms much faster, and they can. Deregulations often works faster than that. And the second point, and here it is what is also relevant for us, is that there is this confidence effect, and many people agree that part of the current weakness that we have is investment. Investment has to do a lot with confidence and expectations about what's going to happen. So a serious, credible reform agenda can have a knock-on effect. That doesn't mean that you cannot do completely countervailing economic steps that are a big drag on demand and still think that you have a confidence effect. But I mean, at least positive implications may come in much faster.
Maybe you should put France on the program and then enforce reforms. Maybe that will help.
Well, France so far is one of our main shareholders and guarantors, and I think that will stay that way. So it stays on the
not on our asset side of the balance sheet.
Some people say, and maybe what's your opinion, some say that it's not enough when single country reform, let's say Greece, Portugal, Spain, all the program countries. And I heard it from a number of Portuguese policymakers. They said that an orchestrated reform movement, it's necessary for the Eurozone to deliver something. So what will be your position and what's your opinion on this one? If it will help, is it possible even in the Eurozone?
I mean, from my perspective, what I find very dangerous is that we would now engage in a mentality of finger pointing at specific countries. I think part of what I said is that Europe has built up a governance structure also to look at structural reforms, which is the macroeconomic imbalance procedure. There are country-specific recommendations issued to all countries. I think all countries have the responsibilities to live up to those country-specific recommendations, take it serious, and engage collectively in a strong reform effort. And I personally think that all the means that are available to provide incentives for structural reforms should actually be used now. And that includes the limited leeway that is given in the current Stability and Growth Pact for setting incentives for structural reforms, and includes the macroeconomic imbalance procedure, which in principle can even go up to the level of fines. So I think the best should be done to use all the available instruments that we have, given that structural reforms are now crucial, and it's a call on everyone.
GUNTRAM?
Yeah, I mean, let me just kick in on one or 2 points. I mean, first, I of course agree with Wolf that one interpretation is the glass is half full, and it is indeed half full and not half empty, if you wish, in the sense that we have avoided the worst. But still, I do think we are still in a very fragile situation, and we need to address that. And I think we have a duty also towards citizens to really address this, and I don't think we disagree on that one. Now, let me just echo this also on his point on expectations and structural reforms. I mean, if I think about France, I mean, it's really quite a puzzle why France is not growing more than it does currently. Certainly, the fiscal drag is not really there. I mean, there is no fiscal consolidation happening really in France. So I don't think one can say fiscal policy is the main driver of weak growth in France. I think what is one of the drivers at the moment is the policy uncertainty that we had in the last 1 or 2 years. I mean, we had the previous Prime Minister announcing a major tax reform, Prime Minister Hérault. Well, if you know that there's a major tax reform and you're a business, you wait with your investment until you see the contours of this tax reform. Then the tax reform didn't happen. And now we have a new Prime Minister. And I think one of the things that the new government is now rightly emphasizing is let's get the credibility on a number of key projects and, establish a certain steady hand. And that's very, very important for investment. Now, let me perhaps take up one point by JOZEF on the banks. I mean, perhaps I see one point a little bit differently than you do. I think what the banking regulation at the moment is trying to achieve, it's not trying to achieve that you do not take risk anymore. It's trying to achieve that if you take risk, the risk is not borne by the taxpayer, but the risk is borne by your shareholders. And I think what you're seeing now, and that's what many bankers report on, is that this transition is very difficult for banks to handle. But if you look at the economic literature, I mean, what you see is that at least in the kind of the medium term, after the adjustment is happening, the banking systems that have more equity and have more ability to absorb risks are not lending less than banking systems that are weakly capitalized. So in principle, I think we go exactly in the right direction. We are trying to increase the capital base of the banking system, and I think you reported that the Slovak banks are very strong in equity, and I think that's a very good thing, because what it means we are removing the subsidy that existed before to the banking system from the taxpayer. We are removing that and we are internalizing it, to use the economist speak, and we're making sure that the risk that your lending actually implies, and every lending, as you rightly say, every lending is risk, this lending should be borne by the shareholders, and I think that's just a very good development, in fact.
But this is fine for me. I think, this is fair enough, that, the shareholders should, but we are basically creating this world where the shareholders should take the risk for their whole business after having subsidized a lot of banks in the past from the money of taxpayers. So
That's right.
it's partially coming slightly late, this level playing field. The second thing I want to raise, I said that we created much safer banking world because, if you look through the banking world, you will see that, the banks have much more equity than they had, in the past, sometimes three times, 4 times more. This is happening, in the time when, of course, equity has become a value on the markets, in the environment where parts of the equity is withdrawn by the taxes and by the levies, imposed on the banking industry, and by other, structural measures, which should create a certain pillow for the future across the Europe. Means, the banking industry as the industry where to invest is not, extremely on the charts of the investors having, already below the average, ROE. So basically this is a partially trap. The banking industry is much safer as it was before. I am just saying, in the same time, this is not always conducting what, the politicians and the economists are asking for. Let's lend more, because, the regulation are telling us, evaluate your risk properly. Means, ask for the right portion of the equity. If there is not equity, ask for the right collateral, which is material, evaluate the collateral in proper way, and always price the risk properly. And, if you price the proper risk margin, then sometimes you are reducing the repayment capacity of the borrower. And I'm just saying that with these measures, the accessibility of the loans, has become lower for the companies, and especially for the small and mid-sized companies, where generally the equity available and the collateral available for the lending is lower than, in case of the big companies.
This
And
is why they want
it
to
can be
create-
solved, just in 2 ways. Then, somebody will help, or share with the bank risk, and if not, which is, I think, the fair way, then the competition can solve it, that, the banks will compete, but, should not compete on risk, because, this is again the way we already passed. Or should compete, in discovering new solutions, how to offer, also to the companies which under normal circumstances would not be eligible a certain kind of financing.
But that's exactly why the policymakers are trying to speed up creation of capital markets union, just to make
Yeah,
it.
of course. Yeah, but we cannot forget that, especially this part of Europe is very pure for equity. Means, if we take, the U.S. markets, then, you see that, 1/3 of the projects is own equity, 1/3 is coming from the banks, and the last third is coming from the capital markets. Yeah? And we are living, in an environment, especially in the Central and Eastern Europe, when, 90% of the financing is purely banking. Because there is not the capital markets available, and there is not own equity. There are not own equity funds. So it makes the things much more complicated, because basically the economy is completely dependent on the banking financing.
Please.
I have a question on this to you, given your experience as a banker and given your background here in this country and the huge importance of the SME sector. How credible is the hope that financing for small and medium-sized countries, small and medium-sized enterprises, can be shifted towards capital market instruments? Is there any hope in the short run, in the medium run?
I don't believe that we can change the world in a short term. Means, you know, there is a long way to go in order to create like a running and good working capital markets, which will also support, you know, mid-sized and SMEs. Yeah? If you look Slovakia, I don't remember, you know, the last like capital market transaction here. It was probably one in past few years. Yeah? So you know, to believe that in 2015, you know, and 2016 we will have a working capital market which will give, you know, to the companies, you know, equity for their ideas, I don't believe so.
Maybe
we simply still have to rely on the financing,
yes,
you know, from the banks, and the good message for at least, you know, Slovak companies is that, you know, the banks are healthy, basically well capitalized. There is no issue with the liquidity. So the market is basically self-liquid, and this is just the question of agreement. What is feasible? What can be done? And what are the bank, you know, they're ready to finance?
Please.
I guess these are structural problems of the Slovak finance sector, but there's one point where I have to agree with Jozef, namely, and it's not the Slovak problem, but it's a European problem. There is not only the supply side problem to financing, but there is a demand side problem, a great demand side problem, and this is not something completely new, but I think that recent, not reforms, but the recent initiatives also by the ECB and by European authorities focused more or less purely on the supply side problem, and demand side is sort of left behind. But I would like to come back a little bit in the discussion and react to, and here I would like to side with GUNTRAM a little bit, that there are still material risks to EU and to Eurozone. That are different that they were in 2011 and 12, where there was like a really imminent risk of a breakup of the Eurozone and Brexit and other exits. But protracted, let's say, deflation risks or inflation and low growth, this is creating different risks, and these are political, mainly political. You can see that if you have a look at the political map of Europe and about the popularity of parties who are really anti-integration. So I think that this is one of the risks that I don't know, but we'll need to face. So this is where I would agree. And one more point, just a minor point regarding the macroeconomic imbalances procedure. Sure, it is there. It is within the six-pack. It's European secondary law, so there are regulations. But let's be honest, they haven't been attributed the same level of urgency as the fiscal rules and enforceability. The one thing is that it's quite difficult because whereas with the fiscal rules and stability, fiscal part of the Stability and Growth Pact and other regulations, so I would say that it's difficult for countries to improve, or member states to improve macroeconomic imbalances procedure indicators, because they're more or less not in their hands. There's not fiscal rules. So it's on the one hand it is logical, but on the other hand there's not been much political heavy weight placed on macroeconomic imbalances. I would not say that they are purely formal, but they are far from being enforced in the way as the fiscal rules are.
Before we go on, I'd like to ask if there are any questions from the auditorium. If so, please raise your hand and ask a question. Any questions? No, so we can go on. Rolf, you've touched an issue which is interesting about how program countries are moving forward with reforms. My question will be, given the political reality, and we have a political cycle of 4 years, is it even possible to deliver on structural reforms pledges when you are forced by national elections, etc.? Is it even possible to commit, let's call it a political suicide, to really change the economy, France, Slovakia, Greece, whatever, or we are doomed until we are really in a free fall, and then something will happen?
Well, again, the crisis experience is that you can hand over programs from one government to the next, and this may work. You can create these kind of commitments, but maybe that also certainly were extreme situations. It is clear that reforms can be difficult for governments and even lead to the fall of a government, but at the same time, as far as I recall from, again, the economics literature, if people look at it more systematically, it's also not a foregone conclusion that whenever you engage in reforms that this will cost you the next election. So from my perspective, it has to do a lot with mostly its communication, explaining the urgency, and that is, I think, what is needed at this stage.
Okay.
No, I mean, let me just react on this a little bit. I mean, the former Prime Minister of Luxembourg, Jean-Claude Juncker, famously said, "We all know what to do, but we don't know how to get re-elected." Now, afterwards, there was an economic literature that was trying to prove this claim empirically, with mixed results. But I think what Juncker is saying is certainly the experience of many politicians, that it's very difficult to push through reforms. And I guess what we have to understand, and I think this is the fundamental dilemma that we have in Europe, is that we have these procedures, the macroeconomic imbalance procedure, which incidentally I worked on while I was working in the European Commission. We have the fiscal pact and so on. But what we still have to accept is that the decision to do these kind of things are decisions done by national policymakers. National parliaments are empowered to do this. And so the notion that now there is a central planner in Brussels and he says, well, we have a problem with all these reforms that need to be implemented, please just do it, is just a false conception. It's not gonna work the way it's conceived now, because the national parliaments are still in power. And for major reforms, we know you need a political window of opportunity. I mean, Schröder had a window of opportunity to do the Hartz reforms, which was a very short window of opportunity, and it was not because someone in Brussels said something. It was because he had this window of opportunity, and I think we see similar developments now
So it's
in
a game
other
of
countries.
luck.
Now the problem is this is inconsistent, to my mind, with a well-functioning monetary union. A well-functioning monetary union needs to have a much higher degree in terms of coordination of fiscal policy and structural policies than what we are seeing at the moment. And I think this is the fundamental inconsistency or problem that we are experiencing in our monetary union, is that many of these decisions are taken by national parliaments within national contexts, and that's basically where the legitimacy for these decisions is also. But the European Monetary Union requires a much higher degree of coordination, which is why I think eventually the only way we will really solve this and get to a more stable monetary union is by a treaty change that will give some more competences on some of those matters, including on fiscal stabilization, backstop for the banking union, but also some stronger veto rights on national budgets to a European authority that has a proper democratic legitimacy. I think this is the treaty change that I think will have to come. And what you can say is that the whole framework that we have now, I mean, yes, it's imperfect, but what it does, it forces us to actually have these debates already. And I think that's already a good step. Yeah, I mean, we have these, the rules force the ministers, they force the countries, they force the populations to actually think about this and debate on these issues. And so one can have a positive spin on it. Yes, it's a lot of conflict between France and Germany and Italy now on, do we get 0.1 more or less in fiscal adjustments? So, it's a big tragedy, but no, perhaps that's exactly what we need. Perhaps that's the kind of debates we need now to actually move forward towards the next step, which will then have to be, to my mind, a treaty change where the legitimacy is much better established at the European level.
I'm not a politician, but I strongly believe that an environment where some of the countries are doing their homework and some of them not is not extremely helping to the intra-EU relations. Yeah? It has been done a lot on both, you know, the states and the banks, but we are definitely not out of the woods yet. And also the European Central Bank has helped a lot, you know, to calm down the situation. But, you know, this, I would say, you know, the stability is very fragile, and this certain level of law should not be used as an excuse not to reform, where we somewhere see the tendency, and because maybe the pressure on the countries is not so strong. I simply believe that, you know, the Commission should continue to force the countries, you know, to continue with structural reforms, because otherwise we can have, you know, a next wave of the crisis pretty soon.
There's the topic of growth and investments, and everybody's looking for extra money, how to fund the recovery, but maybe a little bit more proactive question. We have enough money, for example, we talk about R&D, innovation, etc., but we spend nearly half of the EU budget on common agricultural policy. Europe is talking about being a leader in digital agenda, etc., but so I would like to hear your opinion. What does it tell us about how serious we are about really doing something? Angela Merkel 2 years ago said that we really need to think about where the growth in Europe will come from, and I would like to ask if really agriculture is the place where the growth is coming from when we spend so much money on it and subsidize it, for example. I hope nobody is going to kill me for the question. Please go on, whoever, all of you.
Is it a rhetorical question?
No,
or
no.
Looks like.
No. Let's like imagine it's an academic floor. You can tell.
No,
and say
I mean,
whatever.
I think the I'm very German on this one. I have to say, I do think we need a Eurozone fiscal capacity for fiscal stabilization and for stabilization of the financial system. But I don't think we will get this kind of fiscal capacity without reforming the EU budget. So I do think the EU budget reform has to be on the table, has to be part of the package.
How would you recommend to reform it? It's up to you.
Look, the beauty of the situation is that I'm an academic, so I just say what needs to be done, and then the politicians need to implement. Yeah. But I mean, look, the budget, of course, there is a deal also behind the budget, right? I mean,
Yes.
and the common agricultural policy doesn't fall out of heaven, so you have to think a little bit more about this. But certainly my sense is that there is a lot of things that we can reshuffle in this budget without hurting growth that much.
Ivan?
No, I can only support this view that the budget is there, the common agricultural policy is there, and it's, I mean, even if I would support your proposal for a reform of the budget, then again, this would take a lot of time. I would suggest focusing on, let's say, new instruments, or something that was also proposed or is put forward by Bruegel or GUNTRAM personally. So I would like to look, I would like to focus not on the things that are really difficult to change, although what I'm going to say is also difficult, but still there was a discussion about what the ECB has done or hasn't done. So the ECB has done quite a lot, I would say, especially with the outright monetary transaction statement. It calmed markets a lot. Now with all the money markets fixing with ABS and other instruments, covered bond instruments, is doing more. But again, it tries to fix the supply side, where the demand side is sort of lacking in this. But the proposal that was around and that was supported also by our minister is that how about the EIB as an existing institution embarks on a let's say massive or more significant investment program, and the ECB, if it decides to go for a quantitative easing, could buy the new EIB bonds. I saw there was some misinterpretation in the media saying that, or implying that there was some kind of conspiracy between the Slovak finance minister and the ECB to try to sort of like fudge this all around and use like a new trick. It's not the case. We are not talking about the existing EIB bonds on the secondary market, but on the new EIB bonds sold on the secondary market or bought on the secondary market by the ECB. So this is, I know it's been a bit provocative, but I think that we'll
You
need.
took it from I had it in my office.
Yeah, I know. I followed the discussion and I saw that you supported it, and I thought it was be a good place to discuss this proposal. And actually, the Slovak one of the priorities for the financial policy for the Slovak upcoming presidency of the European Council is a discussion on the fiscal instruments on the monetary union level, be it and shock absorber, basically, that's a different story, and the other being the common investment program. So these are the ideas that's worth discussing for sure.
But I don't know if I can offer you the right manual how to get out of this mess, but you know, I would have at least two ideas. The one is more traditional, but has been proven right, you know, in the history. And the second one is new, but also more promising. I'm always saying that competition is extremely healthy, and basically is helping to everybody. And therefore, I would recommend to extremely speed up the negotiations about the European Union and the US free trade zone. Because I just give you one example. Just the fact that that market economy and free trade has increased in the world helped to decrease, you know, the number of the people living in the below the absolute purity by 80% in last 3 decades. And this is for me one of the most admirable achievements of the mankind. And the second thing is that we have to be much more open to disruption. And I'm talking as a banker, you know, from the view of industry, which is imposed to the disruption much more than any kind of the industry around. And you know, we have much more welcome new ideas, new technologies, which will show us that some of the things we used to have, you know, in the past will not work anymore. And because sometimes we behave like the anti-industrialists from the 19th century. We blame machines, and you know, we are saying they are taking out, you know, the jobs. And I think Uber is for me, you know, the best example. We are protecting taxi drivers, great. We are protecting the companies, you know, of the taxi drivers, and we are completely ignoring that somebody is coming with the new technology and is offering something which is cheaper, which is basically more flexible and more accessible
and better
to the people.
and much better.
And much better.
I
Yeah.
totally agree with this one.
So we have to welcome the disruption, and we have to accept that, you know, we are not living in the risk-free world, and you know that we will not remain rich without changing the world.
EFSF medicine?
I was about to say, if you feel disrupted, come to us. No.
Okay.
That's,
I have your
no,
card, so I will call you.
No, I have little to add on the structural funds. I just want to flag one aspect or element of the situation of what also GUNTRAM said with the central fiscal capacity. The benefit of central fiscal capacity, when does it emerge? It emerges, I mean, it's linked to a financing advantage, right? If you think about it in principle, if everyone can fund on the market, then everyone can fund on the market. Why should you have a central solution for that if everyone can do that at a low price? And that is at the moment the case, so that all governments can, essentially almost everyone can fund at a very low price in the market. That also takes a lot of pressure of any kind of discussion on these issues. Now at the same time, we must be aware and that this this may not go on forever, right? So interest rates at some stage will rise, and we will learn that we are not back to the world, even though spreads are flattened very much and shrink very much, but we are not in the world where they are all on the same. So there's still risk evaluation out there. So one cannot count on this state to last endlessly. But for the moment also there's very little pressure coming or very little incentive to move in that direction.
Okay. You've touched the issue of monetary policy settings, and that's my question for GUNTRAM and Ivan. And let's imagine a situation, low growth, low inflation, and we have ultra loose monetary policy settings, and then we have the US growing and Fed tightening. We have the same situation in England and Britain. And so shall we wait maybe for the euro to weaken even more, making the economy of Eurozone more competitive, or where will this bring the economy, and where does this places Eurozone outlook on a global scale with two large or major monetary body going different directions, so divergence again?
Should I start? Well, look, I mean, monetary policy has a domestic target in the Eurozone. And by the way, not only in the Eurozone, but that there's a G7 agreement that monetary policy does not try to actively influence exchange rates. So basically, monetary policy is about getting the domestic goal right, and that is inflation close to 2%, close but below 2%. Now we are far away from that, and we know that 5-year inflation expectations, five-year inflation expectations are also falling. So in fact, the ECB is currently, in that sense, not fulfilling its mandate, and I think the ECB has a duty to fulfill its mandate, and has to do, therefore, to my mind, more.
Full-scale Q&E?
So let me talk about the instruments in a minute, but I think the ECB certainly has to do more, and that is irrespective of what the Fed is doing. I mean, the fact that the Fed will tighten or is in the process of slowing a bit their monetary accommodation is probably going to help the ECB, but I don't think that's such a super big. I mean, the exchange rate. If the exchange rate moves significantly, it will be an effect that is helpful for the ECB. But I mean, I don't see the exchange rate moving. I mean, I see it moving a bit, but I don't see it. Well, it's very difficult to predict exchange rates. But I would be very cautious to think that our solution will be a major shift in the exchange rate. Because at the end of the day, and we shouldn't forget that, the Eurozone is running already a significant current account surplus. So to think that we will solve all our problems by weakening our exchange rate even further and boosting our external surplus even further, I think it's just wrong. I mean, it's not going to happen. There will be lots of resistance from the rest of the world, including from the United States, where the U.S. Treasury Secretary has made already an announcement at the last IMF meetings in Washington, where he basically started to get nervous about the strong dollar. So I think it's just an illusion to think we will solve our problems via a weak exchange rate. I mean, that's not going to happen. Now, in terms of instruments, that's a more complicated question. I personally advocate the strategy of moving much more strongly on private sector assets than currently, and you can include corporate bonds in the basket, and that gives you quite a big additional amount of assets that you can buy. You can certainly start buying European bonds, and there's quite a bit of European bonds out there. EIB, we discussed that. ESM bonds are out there which you could buy. Now, then there's a question: if that is not enough, do you go for sovereign bond purchases of national governments? And I think it's something that is within the treaty. If the ECB decides to do it, it can in principle do it. It is allowed to buy sovereign bonds in the secondary bond markets. But it's a huge issue to do it. It has lots of implications in terms of relative prices of bonds, in terms of interest rates, in terms of incentives to reform or not to reform, in terms of political opposition to it from my home country. There is a lot of resistance to this. And to be honest, I don't know what would happen if the ECB is doing a massive QE program, which would include a massive amount of Italian government bonds. I don't know how this will play out, but I certainly would hope that kind of the basket of private sector assets plus European assets will be certainly enough. It's certainly enough to get the 1 trillion that the governing council is now committed to do.
And will the 1 trillion
whether
be
that
enough?
will be enough for inflation, we will see. Yeah? I mean,
Please.
I will have a very, very short comment because, as I said previously, maybe it's not the most appropriate way for government official to comment on monetary policies. I have already said enough, I would say, and I can only support what has been said by GUNTRAM right now. But I would come back a little bit and react to ROLF. And you correctly pointed out that, or you said that actually the interest rates are so low that we can borrow already now. The markets are saying yes. I mean, we could borrow, the states could borrow if it was not for the national limits on public budgets or the Maastricht criteria. So I think there is a limit on borrowing, not on the market. I mean, even Slovak government bonds are historically, the yields on them are historically low. So we could borrow on the market, but it's the European and domestic fiscal rules do not let us borrow, basically. And here I find it very convenient to think about borrowing on the European level. Eurozone or EU as such has a zero debt. Basically, borrowing on the European level would not affect national accounts, as is the case, for example, with the EIB. The EIB has been borrowing on behalf of the member states and backed by member states' contributions for 50, 60 years. So I think this is a pretty elegant idea how even the political capital that has been invested in fighting for fiscal rigor, I would say, can be maintained, it can be respected, and it can be, a face-saving let's say exercise also for the countries that support this and rightly support this, because it was important and is important to maintain credible on the bond market for the bond market investors.
Forgive me to be a banker. I'm just singing loud, and I'm curious because it was mentioned that probably the further weakening of euro is not the way, and will also not be accepted by US. On the other side, we have two completely different pictures. We have a US economy growing much better than the European. We have, their inflation target pretty close to the real inflation, tackling, the unemployment below 7%, and leaving the quantitative easing. Yeah? And, if they stated they will leave the quantitative easing, this is just a matter of time when the first rate hike will come. We have a completely different, situation in Europe. Yeah? We have the inflation targets and the real inflation completely out of the range. Okay, now we have a, a corrected inflation target by the ECB, but 2 weeks ago, the target was somewhere below 3%, and the real inflation was close to 0 across the Europe. So, basically facing the real threat of the reality of the deflation, grows not. And of course, still, in the middle of the quantitative easing. So, I'm just curious how to tackle if the US will increase the rates, how to avoid, the further weakening of euro.
I would like to know, take some questions. I hope there are questions. No questions at all. There's one. Please.
Yes, I'm Pierre Sorbet from HSBC. Previously, in a session, there was a declaration that ESM could have been used to fund 80 billion euro of the Juncker plan, and that it had been politically blocked. Is it a definitive block, or is it a good idea or a bad idea?
So I guess that question goes to me.
Could be, yeah.
So I mean, as a matter of fact, for us to engage in that activity, that would require a treaty change, a change of the ESM treaty, not of the EU treaty. So the ESM treaty, which requires the consent of all member states, and that consent at this stage is not given. That is as far as we can go. And that's the member states' assessment and judgment. Whether it's good or not good, I mean, simply factual, currently of the ESM, of the 500 billion lending capacity, 50 billion are tapped by the countries so by Spain, by the Spanish and the Cypriot program, which means that 450 are not tapped at this stage. At the same time, having spare capacity, so to speak, in a crisis resolution mechanism, also as kind of a firewall, is not a bad idea. So from that perspective, it's a matter of judgment how you see this, but there is certainly no political consensus of us moving in that direction.
There was one more question.
I've got a question for the German panelists, at least German by passport, by nationality. The ABS purchases by the ECB are quite disputed in Germany, so I would like to hear from you, what do you think about the critique by Hans van der Seen and others? And second part of the question, I guess you'll be very critical about the critique. So what do you think banks, which incentives will banks have if they'll use this instrument? So will they still care about their cash flow, about the cash flow of these products, if they try to get rid of certain things and sell it to the ECB? Thanks.
So there are two
Who
people
starts?
with a German passport.
I do not have German passport. So.
But I can say something. Shall I start? Or?
Well, I mean, from my perspective, I agree with what GUNTRAM said, is that the ECB has a very clear mandate to try to achieve an objective of price stability. At this stage, we are far below that objective of price stability, so the ECB is asked to do what they think is useful and helpful action in that respect. That is what they decided and why they implemented some measures. In implementing those measures, they tried to also take care of the risk aspect for their balance sheet in terms of the assets they would be buying, and be very responsible in this regard. At the same time, one must also notice that so far the ECB has expanded its balance sheet relatively less compared to other central banks over the crisis episode. So from that perspective, I don't see a reason to question ECB policy.
I mean, perhaps let me just add, I mean, Hans-Werner Sinn has, for example, also criticized the collateral policy of the ECB in the context of the Target 2 debate, saying that essentially the lowering of the collateral standards and so on are increasing basically allowing the ECB to fund current account deficits, and the reality is that the ECB hasn't made losses on its liquidity operations, and for the asset purchases, I think it's very similar. I mean, there is there is a proper risk management. You buy those assets ideally at market value. You try to buy in many markets, not just in one market. That would mean you completely change this market. You want to buy in many markets to avoid that too much risk is being taken on board and too many distortions are being implemented. And in the purchase program, it's quite clear that you buy not the junk ABS. I mean, what you're buying is you're buying the senior and the mezzanine tranches, if at all. And as you know, the mezzanine tranches, there's no agreement on the mezzanine tranches in the governing council. So basically, the ECB is protecting its balance sheet quite a lot. Now, does the ECB actually have to protect its balance sheet that much? Well, to be honest, the treaty doesn't say it. What the treaty says is that the ECB has one mandate, which is achieving price stability, which is defined as close but below 2%. The treaty doesn't say the first prerogative of the ECB is to protect its own balance sheet. That's not what is in the treaty. And so to my mind, yes, the ECB should buy those assets. And yes, the ECB, in doing this, can take on some risk. I mean, that's what central banks do. Central banks take on board risks. That's what central banking is all about. You have to take on board risk. Every monetary policy operation involves risk, and those operations also involve risk. And that's part of what central banking is about. So at the end of the day, I think as long as the ECB is doing this with a view to fulfill its mandate, it's doing this in not a completely crazy way, but in a responsible way. And I think the ECB is doing it in a very responsible way, perhaps too responsible. I don't see any reason to worry.
I don't know if I can react not having a German passport. Now, just, I know the statement of Mr. Zinner. I just can say that it would be nice if we banks, can take our toxic assets and to place them somewhere else. I just have to say, knowing the structure of the ABS, and that, it would be hardly possible. The ECB is going, to give to the banks loans, and, this is a normal business that they are asking for collateral, and there is a certain eligibility of the collateral which must be fulfilled. So we are talking about, the best assets the banks have, on their books, and from this point of view, and we cannot forget one thing, and it was already stated that it was a typical operation which were provided by the central banks anyway in the past. So there is just the ECB, taking over certain part of the responsibility. So I don't see in this structure, the way how to get rid of some not wished, loans the banks has on the books. This is a normal business. You get the loan and you have to collateralize it with eligible collateral. This is my point of view.
Okay, we still have time for one more question, please.
Hello, Lubor Vancho, KPMG. I have a question for JOZEF SÍKELA now, as a non-German passport holder.
I am a Slovak with Hungarian roots.
That's very nice, yeah. Erste belongs to basically three major banks in this region. So Raiffeisen, Erste, and Unicredit are the three further major lenders in Central Europe. Unfortunately, what we can see, the countries, small countries like Slovakia, Czech Republic, sometimes Poland, they deliver very good results for these groups. Highly profitable, efficient, etc. Isn't it frustrating for a manager like you or other managers that you have to pay for bad decisions in Vienna or political influences in Hungary, Romania, etc., etc.? How do you feel about that? Now you are going to Vienna, yeah?
Yes, now I'm going to Vienna. Yeah. So I do not have a problem with it. I think we are basically operating in the region with which is pretty similar in the certain things, but pretty diverse in other things. Yeah, and just if you take the Visegrad 4 and the current views of the different countries, then you see that how different the things are. So yes, we have two countries which are basically performing extremely well. Maybe because they passed their historical banking crisis already around the millennium, and that maybe the bankers having collected this experience were basically more careful with certain things. Yeah, we pay a certain bill in Hungary. The bill is extremely high, and the painful thing is that we are not paying only for our own mistakes, but also for certain political decisions. But we still believe that the common sense will win, and in a certain time we will come back and to do in Hungary business as usual. And Romania is a slightly different issue. Romania was purchased in the time when it was extremely popular to pay for the banks high multiples. The world has changed substantially. You will hardly find, across the Euro bank which is traded on par. Yeah, I remember the times 2006 where for not extremely good banks, in Europe, the investors were ready to pay 5 times, 6 times books. Now you have, in Europe, banks which are traded somewhere between 30% and 70% of their book value. Yeah, this is also the bill we have to take, because we have there some things like a goodwill we have to tackle. But I don't think that this is a big issue. Of course, this is a huge management challenge. How on one side to motivate the staff in the countries which are performing not extremely good, because there is a plenty of people doing an excellent job, just in a completely different conditions, and also how to calm down the enthusiasm of the people in the countries which are performing well and believing they are the masters of the universe. This is a huge management issue, but I believe that the way how to get out is that if each country is doing the business as good as possible. Yeah.
Do we have time? Yeah, the last question over there, please.
Thank you. If I may, I would have one more question on the issue. So if I buy your argument and the whole ABS purchase will work, then I have a question for Mr. SÍKELA. How will that help you actually, assuming that it will free your capital, how will that help you lend more? So how will that help you spur growth and then through that achieve the ECB its objective? It's monetary policy objective.
If you ask like for a direct impact, then I think we learned a lot. So what we have now is the clarity of the treatment, and after a different approaches from different sides and from the different regulators, we have now clarity how to evaluate the business, what we are asked, to deliver, and how conservative we should be, and what does it mean? What does it mean, for example, if I restructure the loan based on the request of the company having, a seasonal problem? So this is something what I can incorporate in my decision making, and I am now, much better in the evaluation of the impacts on our balance sheet and on our P&L than before, because when it was the time of the uncertainty, which regulation, which buffers, and then that you always incorporate a certain level of conservatism in order to tackle the things you do not know. So the best help for us that we now have a certain level playing field in understanding what is requested from us, what are the reporting lines, you know, how we will be judged, you know, how we will be evaluated, and which kind of treatment we should use towards our clients. Yeah, this is, if you ask us, having after the correction in the adverse scenario of the stress testing, the core T1 as a Slovenská sporiteľna of 19.4, and being ranked on the position 12 out of the 130 banks, you might understand that even a 19 would be good, and there is not an issue concerning equity or so. As I already mentioned, this is not an issue of equity or liquidity. This is an issue of demand and of ability to find a common language with the customers, what is possible from the risk management point of view and what is helpful for them. So, and here the competition might help, because everybody will now fight for the best projects, and the customers are simply asked to come with the good ideas we can lend.
Thanks. I hope.
I don't know if you are happy with the answer, but there is not direct impact on us, because of the result of AQR or stress testing.
Yeah, that's
I just don't understand how these instruments are supposed to help the ECB achieve its
maybe
target.
you can finish the discussion when the panel is over.
Yeah, sorry.
Two of you. I'm sorry to interrupt you. So we are at the end. I hope that we left you more confused than before. And thanks to all the panelists. Conclusion will be that we have no idea how the Eurozone will go with the recovery and how fast. Let's see, and see you next year. Thanks.